So Deepak, we've been talking a lot over the last few weeks, but today we want to talk about something that's a little different. So since 2014, all over the world, oil prices have been down for whatever reasons. We're not going to get into that. But the last few months, I've seen oil come up again. It's at nearly $75 a barrel at the moment, which according to some articles, including one at Reuters, that's a little too pricey for the Indian government. The Indian government or the financial institutions tend to stick to $65 a barrel as their predictions. So is this a big problem for India, or does it just mean that we've got to pay a little bit more for gas in the station?
Well, you will pay a little more for gas. I don't know where the $65 number comes from, because it's largely, I think, again, figments of people's imagination, because I don't think the RBI will say something like 65 or bust, So there will be factors. These are marketable products, so there's obviously they're market products, so obviously the prices will go up or down depending on how the market wants to perform. And to a certain extent, the price of oil has also been artificially raised by the OPEC, primarily because their revenues were falling, and because Iran's now been kept away a little bit from through economic sanctions and so on. But they will figure their way out. Iran's producing more oil than it has ever had. The America itself is going to be producing as much oil as Saudi Arabia. So effectively, they are going to export most of their oil, and they are much of that oil, and they are already self-sufficient in their oil needs. They don't have to import oil anymore, but they will now be exporters. So the more prices go up, the more likely the US is going to pull out more oil and export it. So any of these events can be artificially managed for about a year, because Saudi has a lot of money. You can still buy up all the oil contracts and try and raise prices for a while. But at some point, this extreme supply is going to hurt them as well. So there's an IPO coming of Saudi Aramco, which is the world's largest oil producer. So they want that to be a blockbuster IPO. It won't happen unless the oil prices are ridiculously high. And therefore, they're going towards being ridiculously high. So at some point, this begins to hurt everybody, including Russia, including countries that don't necessarily align with Saudi Arabia in all respects. So Iran will produce more, America will produce more, and eventually Russia will produce more, just in order to get the maximum out of this price cycle, because Saudi is producing less, or some of the Arab countries are producing less. Remember, Libyan oil is still not back in the market in a full way, and Libya is one of the cheapest sources of oil, of good oil, because it's what's called sweet and light. Light sweet is the easiest to refine, it's the least complex, so it has the highest price in comparison with heavy sour, which is what comes from Iran. So oils in general, even though crude oil prices may increase to a certain extent, I think our impact is going to be largely driven by the dollar. At 67, we've seen a 5 to 6% increase in the rupee price and the price of that as well. So whatever you buy, if most of it say comes from abroad, we import from China, we import from the US, we import a lot of other stuff, all that stuff is going to get more expensive. We're going to see some inflation. It may not necessarily be bad, because we haven't had oil inflation from a pricing perspective for the last 3 or 4 years. But spikes in oil prices plus a spike in the rupee will diminish the amount of consumer discretionary income that is available to spend if prices were to go up much higher. It does not seem like it is so far, but you will not see the issue restricted to oil. It will be going downstream into other instruments as well, including your restaurant bills, your transportation bills of different sorts, your children's school and college fees. It's going to be across the spectrum if prices continue to rise. The question is, when's that going to happen? We don't know. Let me just say that oil prices are a symptom that we are effectively are so dependent on it that we need that kind of oil, and it's going to affect our whole economy. At some point, this has got to switch into, we'll use more electric cars, we'll use more non-oil produced electricity, and that will change the game. America's changed it by actually producing more oil. India might be able to change it by saying, listen, we'll just generate different kinds of power, maybe electric cars, maybe non-generate. You don't need diesel generators in every house. That kind of power.
So the only problem with that assumption is, now we're talking, obviously we're saying this is a short-term thing based on geopolitical consequences. But let's say it all stabilizes, Russia, Saudi Arabia, America, all friends next year. We get oil prices down to a decent price. Venezuela's back, Libya's back, Iran's back. But at this point, we're talking about the the rupee-dollar relationship and how oil affects it. Now, a lot of people across media and financial institutions in India have been linking this oil burst or price burst to something else that's happening, which is a pretty significant increase in bond valuations. So it's becoming a lot more riskier to take on a bond today. Now, do you see that correlation? Do you agree with people who make that direct correlation? Do you just, like you said, you think it's just a symptom?
Not sure there's a correlation. There's two different factors. The oil impacts the current account. The bonds are a result of a fiscal deficit. So it's the current account is about how much a country exports versus imports. So fiscal is about how much of the government spends versus does not spend. So it's not necessarily related, because oil prices going up does not mean the government will earn less money. In fact, in most cases it means that the government will earn more money. Consumption of oil does not stop because people see the price of oil and say, dude, I'm not going to fill my car with petrol today. It's just going to pinch them a little more, but they're still going to spend on it, and the government is still going to earn their taxes. So the fiscal deficit has an impact because of something else, and that something else is possibly some higher levels of spend, not enough GST collections, and so on and so forth. So they're two different things.
Alright. So, last question. You mentioned earlier that America has kind of shown the way where they've started producing their oil and exporting it now, and not just self-sufficient. But India, we don't have those kind of resources. We have a lot of coal, but it's poor quality coal, so we've got to import coal as well. We import oil. And electricity, government's going after it very aggressively, and it's a good thing, but even then their targets are pretty conservative compared to what we need as a country. So how do you see India follow that path? How do we become self-sufficient without the same resources?
Well, we have enough electricity. The problem is that we don't have enough transmission. So if you look at power availability today, it's there. There is power available all the time. You can go to, there's a site called Vidyut Prabha. You can go to that site and see what power is available at what price, to what kind of state, at what time, in what number of blocks and so on. 15-minute blocks. You can say that, okay, power in Karnataka is available today, emergency power is available at 3 rupees 50 paisa a unit. Tomorrow it may be available. This is 3 rupees 50 paisa at the production source. There's a transmission and distribution cost over 150. So it becomes 5 rupees by the time it reaches in, say Bangalore. But 5 rupees is still a decent price to buy it at if you can sell it at 7 or 8, which is mostly what most industrial consumers want. But people are not making these connections, the infrastructure is available, the grid is available, the transmission facilities sometimes aren't, so you don't have enough proper transmission of power that may be possibly related to one factory in Ramnagar near Bangalore or something like that. But this has to change. So we should be generating power but also using it. Sometimes we actually have excess surplus power from a generation standpoint, but less power from an availability standpoint because they can't get that power to you. So you could change that by you saying, I don't want to do it off a grid. I can do solar. And if I do solar, I don't need a grid because you can put your own power in your place. You can do small villages through microgrids. You can augment those microgrids by the external grid in the night. Or you can use large-scale battery production to create sources for the evening. You could do windmills, but windmills aren't efficient enough, so it's not useful. But you could do, there's a bunch of other things like using waves for hydro-generated power. You can use motion in other places for micropower. Change the wattage. For instance, this is an LED light. It doesn't need a 220 volt power source. It's actually going to take that light, take the 220 volts and actually downgrade it in terms of power in order to be able to power this, because this can't take that kind of power. So you'll actually have to transform it downwards. Most of your things, your computers, your LED TVs, your the lights, LED lights if you may, or anything else. Most of their stuff, other than geysers, air conditioners, fridges, and heaters of some sort, gas, for instance, they need higher power. Compression needs higher power, but you could do that with a different technology. You can use natural gas instead of using petrol, or instead of using electricity. You could literally cut away the grid from a lot of villages and have them run off of more micro-efficient devices. The government's actually going down this direction, so it's. I don't know if you saw this. China introduced 9,000 buses, electric buses last year. Every 1,000 buses that it introduces reduces the worldwide oil dependence by a substantial amount. I mean, they're talking of nearly 0.5% or 1% of China's usage will go down because of the fact that it introduced electric buses, and it's planning to do this across the spectrum. It might reduce 15 to 20% of its oil consumption simply by doing electric public transport. If India did the same thing, you'd end up with that coming down as well. So, as the next 10 years happen, our dependence on oil is going to come down. So the longer term is the writings on the wall, but it won't happen in the next 6 months. So yeah, we'll feel some pain.